Hello friends, today we are going to discuss basics of income tax. Myself Dr. Supriya Chaugule, I am working as assistant professor in DRK College of Commerce. We are going to discuss some of the important aspects of income tax. First we will start our discussion with what is meant by tax. A tax is compulsory financial charge. So all the students should note that tax is nothing but a financial charge which is levied by government with the intention to raise funds for public expenditure. There are two types of taxes. First is direct tax. Direct tax is levied on or has impact on same person. The second important aspect of direct tax is it is levied on income of a person. And the third important aspect to remember about direct tax is it is progressive in nature. Progressive means what? As the income increases, the tax also increases. And if income decreases, then tax is also going to decrease. Now we'll discuss about the second type of tax, that is indirect tax. Indirect tax falls on or it has impact on two different persons. And this tax is recovered from the assessee who passes such burden to another person. It is levied on goods and services. Thus, it is also said that it leads to inflation and have wider base too. The example of indirect tax is GST and custom duty, etc. It is regressive in nature. That means it is equal on goods and services. Now we are going to discuss the administration of tax laws. Ministry of Finance has control over Department of Revenue, and under the Department of Revenue there are two boards. First is CBDT and another is CBIC. CBDT means Central Board of Direct Taxes, and CBIC means Central Board of Indirect Taxes and Customs. This is the administrative hierarchy of tax laws. The first is Ministry of Finance, the another is Department of Revenue, the third one is CBDT and CBIC. CBDT deals with levy and collection of all direct taxes. So you can remember that CBDT collects and it is related to direct taxes, whereas CBIC handles the matters relating to levy and collection of central indirect tax. Now we will discuss about Income Tax Act and some of the important provisions. The provisions of Income Tax extends to the whole of India and became effective from 1st April 1962. The Act comprises of determination of taxable income, tax liability, assessment procedure, appeals, penalties and prosecutions, powers and duties of income tax authorities. Now we will discuss some of the important definitions given in the law which are necessary to understand prior to solve the problems on income from salary, income from house property, income from business and income from profession and other sources. These are the four important sources of income, but before that we need to understand some of the basic concept. The first important concept is assessment year. Assessment year is that year which is also called as current year. Assessment year for now is 2019-20 and previous year is 2018-19. Assessment year is considered for calculation and computation of taxable income of assessee and his tax liability. Assessment year is also called as the next year to previous year. Now the second important definition is previous year. Previous year is the preceding year to assessment year. Preceding means previous year. For example, 2019-20 is assessment year and preceding year is 2018-19. The income which is earned in the previous year is going to be taxed in the assessment year. Now, what is meant by assessee? As earlier many times I took the concept assessee. Assessee means a person from whom any tax or any sum of money in the way of penalty or interest is payable under the Income Tax Act 1961. Assessment is done on the income of a person. A person can be assessee. Every person can become assessee if any proceedings of interest, penalty or refund is due by the income tax department or by the assessee, then also he is called as a assessee. A person who is working as a representative or manager of a lunatic or disabled person or any minor, then also he is to be called as representative assessee. So these are some of the important things to remember to whom to call as an assessee. The next important term is person. A person can become assessee. So we need to know to whom to call as a person. In general sense, we used to call an individual, that is a natural human being, as person. But this is the only one aspect or one type of person. The second type of person is called as HUF. HUF is Hindu undivided family, where there is a karta, that means he is the main person who is handling or managing the business. The third one is firm. Firm means any partnership firm. Fourth one is company. A company which is Indian company or foreign company working in India, having control and management of its affairs in previous year in India, is also called as a company. Then AOP. AOP stands for Association of Persons, like unions in organizations, labor unions, or All India Medical Association. Then local authority. Local authority means self-governing bodies which include ZPs, Gram Panchayat, municipal corporations, etc. And next is any artificial juridical person created by law and not falling in the above criterias, that is called as person. So a person can be individual, a person can be Hindu undivided family, a person can be partnership firm, any Indian or foreign company, association of person, local authority or artificial juridical person. So a person can become assessee if he is having income in the previous year. His income is going to be taxed in the assessment year. Now we'll see some another definitions which are important. Income. As per section 2 into bracket 27, income means income may be received in cash or kind. So if you receive any income by way of cash like salary, fees, receipts, or gifts like car, flat, etc., then all are treated as income, and the kind is to be valued as per the rules prescribed under the Act. Second one, income may be from temporary source or permanent source. Income also include negative income. Negative income means losses. There is no difference between income received in lump sum, income received in installment, and this Act does not differentiate between legal and illegal income. That means if you receive income through salary, which is a legal source, and if you receive any income from betting or gambling, then it is illegal income. Both are going to be taxed. Same income cannot be twice taxed. Any award, or if you have income through embellishment or any subsidy, is also going to be taxed, but there are few exemptions to this kind of incomes. Then now we will discuss some of the important heads of income. According to section 14 of the Act, all income of a person shall be classified under the 5 heads. The first head is income from salary. The another head is income from house property. The third head is profit or gains of business or profession. And fourth one is capital gains. And fifth one is income from other sources. For computation of income, all taxable income should fall under any of the 5 heads of income as mentioned in these heads. It should be part of the any kind of head. Then only we can calculate the total income. Total income means the income received from salary, house, property, business, profession, capital gains and other sources. That is also treated as gross total income. When we deduct the deductions under section 80C to 80U from this total income, then we can have the net total income, which is considered for taxation. Now prevailing tax rates for individual, Hindu undivided family, association of person or artificial juridical person born on or after 2nd April 1959 or non-resident individual, the tax rates are: if total income range up to 2.50 lakhs, then no tax is going to be applied on that income. If income rises from 2,50,001 to 5 lakh, then 5% of total income minus 2,50,000 is to be applied. If income is 5 lakh, above 5 lakh to 10 lakh rupees, then 12,500 plus 20% is going to be taxed minus 5 lakh. And if income exceeding rupees 10 lakh or above, then 1,12,500 plus 30% of total income minus 10 lakh is going to be considered for taxation. The reference used for this presentation is from the study material of intermediate exam of Institute of Cost Accountants of India. Thank you.